going on, traders? Welcome back to my YouTube channel. I hope everybody's doing well. On today's lesson, we're going to be going over scaling down techniques, and I'm going to go through 3 examples with you. One using the 4H time frame, second using another 4H time frame with a lower time frame, and then the final one I'm going to use the hourly time frame. And I just want to share with you the power of just using 2 time frames to be able to identify structure and behavior, and then using scaling down techniques to identify the patterns to take your trades. I hope this serves well for you. I hope you find some sort of success from this, and I really want to just define what it really means to keep it simple. So if you're new to the channel, welcome. Please subscribe, turn on notifications, and I hope you enjoy this video. So the first example we're going to take a look at here is on gold. Now you can see the overall structure of the market is a little bit all over the place. You can see that price is not really trending to the upside, neither is it trending to the downside. But when you come to the charts, what you've got to be able to do, traders, is you've got to be able to decide what it is you're looking at. Which direction do you want to be taking your trades? Now, there's many factors that you need to consider, which include currency strength and or weakness, sentiment of the market, and when I say the sentiment of the market, I mean this here. And then you need to figure out how you can work with those confluences to aid to your trading. So I'm not going to say it's going to be easy. It will take practice, but if we're taking a look at gold here, the first thing that I'm going to identify immediately is that price attempted to break the highs, and we've just completely failed to do that. Now, what gives me that indication? Well, this is the high that was put in here around 1829. Price came into this level pretty strong, really strong bullish behavior, and what you're expecting at this stage is for price to break above it. Now, of course, if price doesn't break above it, what we're anticipating is some sort of bearish behavior, which we have evidence here of a wick rejection and a bearish close. This is not just any bearish close, this is a 4H candle bearish close, which is probably the strongest indicator you will need as a day trader, because for the majority of the time that you're trading, it's going to be in a span of 1 day. And if you break it down into 2 sessions, it's probably going to be 2 hours for the London session and 2 hours for the New York session. So once we have this bearish close, you may be inclined to look for sells. I probably wouldn't scale down, but we're going to keep it pretty simple here, and we're going to look for true evidence of this bearish behavior playing out. Here we have another strong bearish close. Now, what's important at this stage is you have to understand that the high of this candle and the low of this candle now create what we call an intraday trend. An intraday trend is where price creates structure on the lower time frames that is represented by this one 4H candle. If you understand that, then you'll be able to follow along, and if you don't, then hopefully as you go along in your trading journey, you'll be able to grasp it. So the point is, now I want to mark my high and my low. Once I have that information, what I then want to say to myself is that if this candle closed bearish and I have one option or opportunity to take a trade, which direction do I want to take it? The likelihood is that my answer is going to be sells, because we can see the candles close bearish off of the key level, and then there's a very high chance price will come back to the next area where we'll get a reaction before either going bullish again. Now, if I take a sell, there is a high chance it can go bullish, but I'm playing the probability game, which means that the probability of it continuing bearish is much more higher than it is bullish at this stage. So what I want to do is isolate my structural low. This is my structural low. Now, I need to decide as a trader which time frame is going to suit my lifestyle to enter my trades. I have my bias, I know my direction. Well, let's just say I'm a 30-minute trader. What I'm then going to do is scale down to my lower time frame on the 30-minute time frame, and now I'm going to be able to isolate this level. This level now forms as a level of support. The overall direction of this intraday trend has now switched from being bullish to now bearish. What I'm now looking for is for a structure to form along with a pattern that identifies the sentiment that I've identified, which is bearish, to look to take a trade. So now I'm patiently waiting for the market to form. Once we have a break of this structural low, this low now becomes irrelevant. It's only relevant for one thing. We either look for a retest of that level back down to the lows, or we anticipate price to come back to previous structural highs to respect it. So now this is what's relevant, the area. So now I will continue to wait patiently, and I'll look for the market to create patterns that resemble something that I'm used to as a trader. Now, one of the most common patterns that I trade is double tops and double bottoms. And if you can see here, if I get this right, Finally got there. We have a structural lower high, and now we have price coming back into that structural lower high, creating what we call a double top. Once I have this pattern, I'm now saying to myself, well, what's happening here? If I was to enter this trade and I was to place, let's say, my stop loss above this level, would the market continue bearish to make a new lower low as the lower high has been formed and the double top is now respecting that previous structure? That is only a decision you can make. But based on my plan, I'm happy to take a break of this structural low and or pin bar wick rejections or strong momentum candles, because remember, my high time frame bias is illustrating to me that the sentiment of the market is more bearish than it is bullish. Once I see price reacting from this level and we create a pattern that I'm very comfortable and familiar with, then I can take the trade. And what do I want to do? I want to take this trade back down to this structural low. Now, can this trade lose? 100%. But as this trade created an opportunity for me to be able to take a trade comfortably, knowing that in the long run the probability of me winning this trade using good risk to reward will play out in my favor and inevitably make me a profitable trader. Absolutely. So I'll execute this trade. Now I'm executing this trade with momentum because I want to take this trade as part of a momentum shift trade, not so much a trade where I think that I'm taking the trade at the perfect level and or have the perfect stop loss placement and I can get the biggest risk to reward. I'm only taking this trade as part of the sentiment of the market. And this is how you scale down using the 4H and 30-minute time frame. Let's move on to the second example. So here we're looking at a second example on New Zealand dollar USD. Now we're going to use the 4H time frame again, but this time around we're going to use a smaller time frame to enter our trades. Let's say we're a day trader and we don't really want to be sitting in our trades for 30 minutes to an hour, 3 hours at a time. We prefer to scale down to lower time frames to be in and out of the markets. That's not the right mindset, but it is just the case as traders. We do sometimes go down to lower time frames to look for better entries so we can get in and out of the market sooner rather than later. Some people's tolerances are better than others, and others just want to get in and out. So when we look at this structure, what you can see here is that the overall sentiment in the market had been pushing bearish. Now we have this strong pullback in the market. What we anticipate when we have a strong bearish move and a pullback is what we call a lower high continuation. Now, what we can see here, though, as part of this lower high continuation, and I'm just going to paint the picture for you, is that we've woken up this morning on the 22nd of December. We've identified the sentiment of the market, and the market is now illustrating to us that New Zealand dollar is really strong today and that the dollar is weak. Now, how can we validate that? Well, let's say here, when we wake up, we identify that the area in the market where we was looking to take the lower high, or would have taken the lower high, always hypothetically speaking, would have been here. We had that bearish move, just like we saw on gold, but we hadn't had that continuation. What we're now starting to form is what we call an intraday trend, where the market is creating structural highs, higher lows, highs, and higher lows. Now, again, I'm not going to scale down to show you this. You either know it or you don't. And as I said, as you become more experienced as a trader, you'll recognize that this is what's forming. What I'm interested in identifying is where price is just broken above this level of resistance. 67, 64 area was holding for a good period of time. We had that bearish move, and then all of a sudden we've had this strong impulsive move to the upside, breaking the highs, piercing it, illustrating that New Zealand dollar strength. So as an intraday trader, what am I interested in doing? I'm interested in isolating that structural high, because now this 1-4H candle again represents what? An uptrend. So that means that the behavior of the market has now switched to bullish. Could I be wrong? 100%. Could this be a false breakout or a stop hunt? 100%. But I'm playing the probabilities game. I don't care if I'm right or wrong. I just want to take the trades in line with my plan. So now let me scale down to my lower time frame. And now I'm going to be using the 5-minute time frame. Why? Because I can. So what I need to do now is make sure that I isolate my levels. This was a level where price is just broken above. We can see that the intraday trend is in line with our bias, which is bullish and New Zealand dollar strength. And now I'm just looking for a simple pattern. We either come back to make a double bottom of this structure, which is the higher low in this formation, or we make a break and retest and we continue higher. Now, I don't know which one's going to happen, but I've just got to be prepared when I see a sign that I'm ready to take the trade. Now, let's say for argument's sake, this is the bullish candle close that I want to take the trade. It's a strong candle indicating bullish sentiment. I place my stop loss in a very safe place, which is below the previous structure. This is not yet the higher low because it hasn't made a new high. So it's still just a structural high, or a potential structural high or low. So we do want to put our stop loss below the previous structure. And now I take the trade. Now, again, traders, I just want to make this very clear. This is obviously in hindsight. And yes, I am using a replay button, but I'm telling you now, pattern recognition is the #1 thing that you want to master before you start thinking about making money. If you're not familiar with patterns, you're never going to be confident to take trades in the live market, period. And if you don't get comfortable with the numbers game and identify that, yes, I will take this now and it may win, or for the other part of the time, they may lose. You have to just get used to it, okay? So let's say I'm taking this trade. Do I feel comfortable? Well, let's think about this. New Zealand dollar is strong today. USD is weak. Previous candle closed strong bullish. Intraday trend is up. We have a break and retest pattern. Can I take this trade? Absolutely. So let's see what happens. So the market continues bullish. Now, I'm not going to be focusing on any management here, but the point I'm trying to make is that we've taken this trade in line with our plan. We finally get there in the end. Now, the example was actually supposed to show you that we don't have to be sitting in trades for long periods of time. But anyway, the point is this. We took the trade because we've identified a pattern that resembles the behavior from the higher time frame sentiment. Let's move on to our third and final example. Okay, traders, so now we're on the 1 hour time frame on CAD JPY. I'm going to show you another example. Here we have a resistance level in the market. The overall trend of the market has been pushing bearish. We've pulled back to some of these previous structural highs. If you look to the left here, around 89.40, prices respected that level. We've come back into that level again. Now, can we take a sell? Well, the question is this a sell as part of your plan? Well, if we think about it, it could be, because the trend is down. Prices respect this level 3 times. Now we have price reacting to this level, failing to break above with a bearish candle close. But what we don't want to do is just jump into a trade. We want to make sure we're scaling down to make sure that we're identifying tradable opportunities. So what should we do? Isolate the structural low, because this is an intraday trend at a major key level, and start investigating the behavior. So now we're going to use the 5-minute time frame. So now we're in the 5-minute time frame, and we can now start to investigate what's happening. This is an area in the market where price is respected 3 times in recent history. What we can see from an intraday perspective is that the trend is up. And what we're starting to identify now is that the behavior from this level is being respected, so we're not making new highs. What we want to be able to identify is that there is a shift in behavior. So before we take sells, we need to see that the low of this structure is being broken, because in theory, this still could be a double bottom continuation buy. But what we're identifying from the higher time frame is that the behavior is still holding these levels. It has turned bearish. So now we just need to identify a pattern. Previously, we've seen double bottoms, we've seen break and retest. Now we'll take a look at this. This is what you call a breakout. Now this is a new lower low. We've broken the previous higher low. We've invalidated the uptrend. We have price failing to break the highs with a lower high formation. The question is, can you take this trade? Well, absolutely. Because the idea is this: we've identified that the behavior has shifted from the higher time frames. The sentiment on the intraday time frames has changed. We now have a pattern that you may or may not be familiar with, which is a breakout pattern, and a lower higher we can comfortably and safely put our stop loss above in anticipation of price to make a new lower low. Now, I'm not saying all of you are breakout traders, but what I am saying is that this is the thought process that will make you a winning and consistent trader. If you follow the thought process and apply it to your own personal trading, this is where you will start to see results. I hope this was useful to you, and if it was, please hit that thumbs up button for me. Subscribe if you're not subscribed already, turn on notifications, and until next time, continue to trust the process.